All right, we're back. We're showing you shares of Nike here. That stock's a ripper today, up 17%. So Brian Belski, you own the stock. We talked about it going in to the print. So you still had the biggest year-over-year revenue and EPS decline in 5 years. The question, obviously, that the market has made its decision on is that the worst is now behind this company. Is that true?
Man, I'm so glad Linkster's on with me today because her and I have gone back and forth on this name for a long time. And the last time I was on set, we talked about Nike again in my value portfolio. Sometimes you buy value stocks and put stocks in a value portfolio for the turnaround. And we bought this stock because operationally we really thought it was going to be turning around. We saw that from a valuation and earnings growth basis, this stock had a lot of problems, but obviously with the news today, it's starting to come out to fruition with respect to these operational issues that they've changed. So that's the quintessential type of value bottom. We feel good about the report, and we still like the stock.
I mean, let's be clear, though. Nothing's happened yet, right? You
No.
Can't claim any bit of victory on any bit of turnaround. You're just thinking that maybe now the turnaround can actually start, right?
Yeah, I mean, I think when you start to see these types of things and you're starting to see a move like this and people start to believe it, and we're not the only ones kind of thinking that the turn is coming. So, again, it's affirmation, confirmation. It's still early, but, you know, last time I checked, when you're an investor, you want to be early, not be chasing things after they've moved.
Sure, but I mean, you know,
there was absolutely nothing good in the quarter. Nothing good whatsoever.
I'm hand it to Steph.
I mean, direct down 14, digital down 10, North America down 11, China down 21. They haven't invested in their products in years. That's the problem. And now you have so much competition. I have no doubt they'll get back. But I just think this is at least a 2-year turnaround. I'm all about turnarounds. You all know that. But this one, I think you have.
Well,
I would sell it today.
You would sell it?
Yeah, I would.
Wow, because that's a statement in and of itself. When the turnaround guru on the halftime report takes a look at this and says, "I'm not even touching it now," and Brian, what do you make of that? I'd sell it here for all the reasons that Steph just articulated to you.
Well, we run several different type of benchmarks and portfolios. This is only in our value portfolio, and I love when you hear people say this is a very small position.
Dude,
blah,
come
blah,
on,
blah,
man.
blah,
Just play it straight with me, man. Just play it straight with me. She says sell it. She doesn't believe in the turnaround. I don't care about 4,000 different portfolios and which one you hold it in, man. Come on.
It's 10 different portfolios. We've been doing it for years. If Steph's going to be a tactical investor and look at Nike, she should be selling. If I was a tactical investor, I'd be selling.
She's not a tactical investor. She's not an in and out today, tomorrow kind of investor. She's not that. She's as long-term investor as we've ever had on this program.
I'm not going to question her process in terms of turnaround. If she doesn't think it's a turnaround, it doesn't turnaround. For my perspective, owning it in a value portfolio, we own it today.
He should sell
it. I would sell it. I would.
Why do you think he should sell it?
I mean, we talk about being early, Belski. We sold it in April of 2022 at $135. It went down 60%. I use this pop to sell calls or get out of the position. I agree with Stephanie.
All right, let's go Boeing. Upgraded today to buy from neutral. Remember, this is all Dow stocks on the move today. Target 275 from 180. Steph, I'll give you this one. Boeing.
Well, it is up.
Speaking of turnarounds,
it's up 55% from its low. So is GE. They trade on the same, right? GE delivers the engines, but it is a turnaround. It's the CEO doing a really good job at executing. Last quarter, I think we talked about it was the first quarter in like 5 years they had operating margins that were up year over year. So the deliveries are coming on track. They're going to increase them, and the cash flow is going to go from negative $2.2 billion this year. I think it could get to $12 billion as they deliver more planes by 2027. And the stock is trading at a big discount to its EV to EBITDA, EV to free cash flow multiple, 24 times versus its historical average of 38 times. So I like the CEO. He's doing a good job. Duopoly, too.
All right, Brian, Disney, 137, the new target at CFRA. They reiterate their buy. 140 is the new target at Guggenheim, and that stock is at a 52-week high today.
Yeah, Disney's actually done a pretty good job in their streaming stuff. We own it in a couple portfolios. We've minimized our positions because we prefer Netflix and other areas in communication services like Spotify, but we're obviously happy with the results that we've seen lately, and we endorse these upgrades. We like that a lot.
What portfolio is this in, Brian?
Wow, I just can't.
We'll get the headlines now with Silvana Hanau. Hi, Silvana.
Hey,
You deserve
Scott,
that.
good afternoon to you. All right, well, the Supreme Court has ruled to keep a key part of the Affordable Care Act's preventive health care coverage requirements that affect about 150 million Americans. In a 6-3 decision, the court decided in favor of the Trump administration, which was defending the law, arguing that members of a panel that recommends preventative care services were legally appointed to their jobs. 3 conservative justices dissented. A top Republican senator is proposing an overhaul of the office led by National